Alright team, just providing you with a breakdown from today's price action. I actually created this video earlier until I later realized that I was not even recording. But nonetheless, here we are. I'll try to focus more so on the New York session, but there will be things that will come up as it relates to the London session, right? So let's jump right in, okay? Now right away, this area here, okay? You know, I was kind of expecting or would have anticipated that we'd, take out these equal highs. However, we don't do that. And, I came into the day kind of basing, any shorting opportunities, I was basing it on wanting to see this area here taken out, right? Because, on any typical day, of course, we look at this area as our true order block, right? And then we can see how many times price actually engaged with this area, okay? So it wasn't until New York session that we actually, displaced lower back and through this area, okay? So let's clear this out. So this area becomes our breaker, okay? And we have displacement beyond that area, all right? So now if we push down to, let's go to the 3-minute time frame. Okay, so on a 3-minute, right? So let's actually go to the 1 minute. All right. So what we have here is this is that true ICTOB, right? Series of up close candles, and you're going to see a lot of this throughout this video, right? Here's a series of up close candles, all right? Here's the low, right? Of that area, okay? So price, right here we have a breaker. Price is trading back up to this area here, right? So we mitigate this true ICTOB, okay? We come into this fair value gap in the middle, and then after taking out these short-term highs, okay, price provides us with a failure swing, okay? Now, here's a true ICTOB again that forms right here. But we can see it on right here, 2-minute time frame. Okay. All right. So we push up, we take out the short-term highs, which is also, just mitigating this area here. And then once we have that, we get a failure swing, right? So now here's where we have this series of up close candles again, which defines our ICTOB. Fair value gap inside is what we want to see because that is what solidifies it. Okay. And something I want you guys to notice here is, basically price is just trading up. My focus was here on this fair value gap. And these entries actually came late, but it made all of the sense in the world, right? We had short-term high, intermediate term high, and then the entry, you can say this is another short-term high here. But to tell a complete narrative, we're inside of a breaker, right? We're taking out buy side liquidity. We have a failure swing, and we displace beyond this point, right, which solidifies this as a true ICTOB, and then price comes back up here, and we basically, this is where we take interest from, or you could have just highlighted this FVG and took interest from there. All right. And then from there, price comes down, and we'd be targeting, this low, and then obviously this low, and then previous week's low. Okay. Now we only made it to this low before price began to reprice higher. But then what I want to shift you guys' attention to is here's that 8:30 opening price, right? Look how it's used as resistance. Okay. Price literally comes right to that 8:30 opening price. Okay. So this is why 8:30 is just as important as the true day opening price, simply because it if we get to New York session, right, and in my opinion New York session is the better session to trade, but if we get to New York and price, and we're anticipating lower prices, but obviously in this case price is already below the true day open, then we recalibrate at 8:30 CME open. And we'd like to see, that those signatures in price form above that CME open, right? So here's kind of power of 3 accumulation, manipulation, and then once price pushes lower, that becomes your distribution phase, right? Okay, so that was that for pound USD. I didn't really study London session as much. I'm not really sure what happened in London, other than price kind of ranging. But other than that, I won't spend too much time there. Let's push to the euro. 15-minute. Okay. All right. So when it comes to the euro, let's actually go to higher time frame. All right. So yesterday, of course, obviously we bought up yesterday, taking out this short-term high, and the whole premises behind us buying up was, early in the week we're anticipating lower prices. So early in the week we like to see price push up and above that Monday opening price. Okay, Monday's opening price is right here. All right, so we see price push above the weekly open into this old volume imbalance. Okay, and you can literally see here, this is the volume imbalance, and this is where price pushes to, takes out previous day's high, and then the euro actually gave pretty good signatures in price within the London session. So here was this is that true ICTOB, right? And price trades lower, right? Once we clear out this low of this candle here, right, you can see it's not until the London session, right at 3:30, is when we come to about equilibrium of this FEG here. Okay, so those entries could have been taken there at 3:30 if you were trading the London session. And then we see a fractal form, short term, intermediate, and another short term here. Now here's where I'm waking up during the New York session, right? And I want to take your attention to here. Okay, so this area here, right, typically this would be our true order block. Okay, why? Because we have a series of down close candles within the range. With this red box is the range, we have a fair value gap, right? And you can see price come here and respond to this area, right? So here's where our failure swing comes into play, right? Because price tries to make another run up, and then we displace beyond that area. Okay, so you could have honestly just traded this fair value gap after this candle closure. You could have just traded the fair value gap. You would have had a bigger stop, but nonetheless, right, the narrative has already kind of solidified itself in terms of where the draw on liquidity will be, right? And in this case, we took out previous day low. Okay, now here's a breaker here, right? Why is that a breaker? Because we come to a 10-minute time frame. You can see down, right? We sweep the lows, price pushes up, we have fair value gap inside, and then price literally responds to this area a few times, and then we displace beyond it, right? So here's a breaker, right? Price rate is trading into the breaker. I'm just giving you different ways to kind of perceive this whole thing, right? So now here, honestly, once price cleared here, it was already kind of solidified that we see lower prices. Okay, now I'll take you to my entries in the New York session from today. All right, so once we have this displacement and this candle closes here, right, I'm looking to trade 50% of this fair value gap. All right, the reason being is because we kind of had, a series of those. So I was figuring if I'm going to trade this one, right, and if we have these up top, I could, possibly get a little lucky and enter here. And it was honestly a pinpoint entry. Then you have this low, right? It's kind of used as a little support and resistance right there. So that worked out fine. And then we saw price push the previous day low. Now I'm still expecting previous week's low to be taken, which I'm like 100% sure that it will. I want to say today is the high of the week, right? I could be wrong, but having these market structural shifts, this is a major market structural shift in my opinion. To see price break beyond this level, it's kind of like what I was telling you guys on yesterday's videos. Typically, 70-80% of the time we'll see the high or low of the week created on Monday or Tuesday, right? So if we can see price trade down beyond this point, which this is equal lows, the intra-month low, this would be a beautiful example of accumulation, manipulation, and then distribution down below. Okay. Now in this area here, 15 minute, 10 minute. All right. So over here, right, we'll find entries. If you were, so 8:30 opening price is way down here. So we're above 8:30 opening price. Okay, we come and we take out. And this is all happening in that London close window, right? It's a little late today on the retraces, but here's the same scenario, right? Short-term high, equal highs. Actually, we take out these highs and we engage a little more with this fair value gap. And here is your series of closed candles, right? True ICTOB. And then you see price trade to the fair value gap. Okay. Right. So you could have taken entries from here. Then, or you can see it. You can see this two different ways, right? Or you could just see this as the breaker. Actually, we'll draw this line. This whole area is a breaker, right? So you have a breaker, you have true ICTOB, and then you have a fair value gap, right? This is destined to reprice down to these areas. So second entries could have been taken here. I actually, I didn't engage with this, but I mean, it's objective, right? This is everything we look for. Everything we're doing is rule based, okay? So we'd be targeting here. That was probably a 1 to 5. If anybody would have taken those trades. Yeah, so that was beautiful. On the euro, let's see here. I was just looking at this area, which is, there's always a reason for why price comes to certain areas, right? So this is a true ICTOB here, right? You see this series of up close candles, down move, fair value gap. Okay, so there's always a reason for why price is pushing to a certain area and then pushing away from a certain area. Okay, even here, right? You see this was a FEG, right? We see price come and treat this FEG here as resistance. Okay, so we continuously saw this scenario happen multiple times, where we're cutting through those fair value gaps. And now, of course, narrative has to go into play, but obviously you can see, how this tends to work out. Let's push to gold. Now, gold didn't give us anything in the New York session, so I was very sure that, if we look at this daily, let's just go, yeah. So when we look at this daily, right, I was pretty sure that we come into this fair value gap. Now I'm sure that price will trade to this area at some point, right? We have a low resistance signature right here. Push into a 15-minute chart. Now if you were trading the London session, right, this is kind of the same delivery that we saw on the euro. Okay, we take out this short-term high. Here's a true ICTOB form. Once we trade below this point, price is only coming right here to the fair value gap, right? So none of us should be trading this at all, but this is why price moved away from this area. And then we form another true ICTOB right here. Price displaces far beyond this point, so at this point this becomes a fairy swing. Boom. And then where's price trading to? 50% of this 50% of this order block. Okay, see that? Bingo. Entry is right at 3 a.m. Right? Spot on. Alright, and the reason I had a 15-minute chart up is because there's always a different way that you can see this or perceive this. Right? This would have normally been an ICTOB, right? You can see price trade out, back down, and then we try to make another run up, and we fail to do so, right? So typically we see this as a true ICTOB, right? And then now this area is used as the breaker, right? So multiple confluences there. Continuation entry could have been taken here once we clear out this low. Now I was telling you guys last night, you know, if we were to leave these equal highs intact, that I would be looking for buys once this low was taken, right? But of course, you know, those are just anticipations. We have to respond to price accordingly, and obviously you can see in here there was nothing that price gave us inside of that area. Now I did take shorts once we displaced past this area, and we completely negated because there was lower time frame fair value gaps over here. 5 minute. You can see it better on the 3 minute, but no need to go down to that time frame right now. Okay. But basically, let's go to a 2 minute. Okay, so once we get this right, and then now we have a failure swing. Okay, you know, I basically took shorts here, thinking that we come and run out the equal lows. This red line basically indicates an equal low, but we just never get that right. But I do want to point you guys' attention to some. Okay, so see this area here, fair value gap. This high. So let's go to 1 minute. Okay, how many times do we see this play out? Okay, so this here is a true ICTOB, right? This is why price is responding to this area. We take out this high, right? Liquidity sweep, completely fill this range, right? So short-term high here, intermediate, and then we should anticipate what? A failure swing, okay? So once you get the failure swing, right, and then you have that series of closed candles that we'll see repeatedly, basically price trades through and then back to the FEG. Okay, 50% of this FEG, and then we go lower, lower, and then lower one more time. So all of this is continuously respected. So if one was to take trades from this area, let's say you trade 50% of the fair value gap, stops would be here above that high, and then I would be prone to target here. Now, of course, price does not make it there, but even at this point, after this low, right? So price is responding to this low here. Okay, there's always a why, right? There's never price is never just moving just because. There's always some reason why, right? Some liquidity pool that's been taken or something. There's always some reason why price is moving. Okay, but even here, right? This is a 1 to still a 1 to 4, right? 1 to 4 from 1 minute time frame, even in a choppy market, based on the same principles that we literally see on every single trade that we take, right? Okay, nothing changes. And you see the fractal form, short term, intermediate, and then over here was the other short term line. And we push all the way down here to this sell side liquidity pool. Okay. Yeah, a lot of these entries came right at noon time today. It's kind of weird. But we got to keep in mind that we have FOMC tomorrow, so we must trade accordingly. Yeah, expect some. Well, I don't want to say that, but during those big releases, you guys should know at this point we get a lot of irrational things that happen in price, things that just don't necessarily make sense. Now oil, right? Which I was anticipating that. I want to say it's 5 minutes. Yeah. So once this candle closed, and I basically saw all of the displacement, we had a sweep of these highs here. Failure swing. This is a true order block. Price displaces lower. I didn't anticipate us running back up into this area, right? But what I did want to see was, once this candle closed, I had a limit, just right in here that was just missed. So I was gonna take entries here, and I was gonna place my stops here, and then I was gonna target that low, which these are equal lows, And then this is the previous week's low. Yeah, Thursday, Friday. Now this is just the intra-month low. Right, this is the previous week's low would have been somewhere here, somewhere, right? But yeah, so we didn't get what we wanted on that. Now, if we come to New York session tomorrow, and price continues to range like this, and leave short-term highs here, then I would anticipate that intermediate term high, stop hunt, maybe another short-term high, and then we would trade lower, right? Nice. All right, so first things first. Alright, so here is a complete FVG fill, right? We take out previous day's high, which was a short-term high. Alright, in doing so, we also tap into this small little fair value gap, okay? So boom, tap into the FVG, complete fill, and then what you anticipate is that failure swing, okay? Now, see these two highs? Let's look at S&P. S&P actually took out this high, okay? So right away, that's the S&T divergence, right? And understand that the reason we're getting a failure swing is it goes back to our rules. Once that range is filled completely, which this was a daily high that was filled, then we anticipate that failure swing. So let's now move to a lower time frame. Price pushes up. I don't know if there were like pinpoint entries on the lower time frame on this. Yeah, nah, they never gave us anything. I'm not trading this pair until 9:30. All right, and then once we get to 9:30, of course there was nothing. Which is why once I saw all of this, I began to just anticipate seeing price trade back into, some of you saw this as the 1 hour fair value gap. I was looking at it, I was just looking at the 4 hour, right? And I was taking this level here and this level here, right, 50%. So stops honestly could have came above here, understanding that this area, right, the smart money accumulation with S&P 500, and then Nas 100 is the weaker of the two. Okay, so this is nothing more than just a what is this here? Here, right? All right, so this is just an optimal trade entry. Wow. Okay. See that? 62%, right? So this was just an optimal trade entry. We take out this high. Yeah, and then if you come to 10 minute, right? Let's say you didn't want to take this, you wanted more confirmation. Okay. If that be the case, then we can see here. Down close candles, up move. This area becomes the breaker. As soon as we trade through, you could short right here, right? And maybe that's a 1-to-1 before price turned around. You short there, you can play with your stop in there. Yeah, so maybe it's a 1-to-1.5. And you can see price comes to this 27 and we turn around. Okay. Now, Moses, you were asking about how I manage, take profits and things of that nature, right? So now if we're risking 1%, and it doesn't really matter the percentage, we all have to have some type of objective plan in terms of how we not just manage our risk, but how we actually manage our trades, right? Because that is where we see the equity curve. Those types of things will show up in the equity curve. So like in this case, like let's imagine that I actually take trades from here, right? And I'm just keen on them taking out this high, and my stop is here, and my first TP is here, and then I would also be anticipating for price to run out these lows here, right? So now, of course, price doesn't run to these areas right away, but TP1 would be here in this case, okay? So maybe I cut off, 25% here, and this is where you have to, this is personal, because if this is 1-to-1, all right, one person may say, hey, well, shit, I'll take 50% off, and then they may have an overall target of here, 27, which was taking out this low and tapping into this OB, and then maybe you take your other 50% off there, or if you were, banking on price reaching these equal lows, and this is maybe 1 to 2.5, maybe, maybe you take 25% off at your first target, and then the other 75, and then another 25% off here, and then maybe you were banking on, another 25 here, and then maybe here, maybe I'm sure this aligns with some type of PD array to the left. But you have to have a rule-based plan, right? It doesn't matter how you do it. It doesn't necessarily matter how you do it. I base mine personally based on, what my risk reward is, right? If I'm only expecting a 1-to-2, then of course at 1-to-1, 50%, and then 1-to-2, another 50%. If it's a 1-to-4, at 1-to-1, then I'm only going to scale off 25%. Okay, and then so on and so forth, right? But it all depends on you. And I'm not a robot. I don't always do it perfectly, which I probably should. Not probably should. I should. Just to continue to be objective. But it's something just to be conscious and aware of, right? Did I point this out? Yeah, this was a breaker entry. I think I pointed it out. But anyways, this is, in terms of us understanding price, we see price push up here during that lunch hour. Okay, so typically we saw this happen yesterday also, where right at noon we took out an AM session low, right? Right at noon we took out an AM session high and repriced. Okay, so that was why I kind of put that in the group today. And then you can see how the 9:30 opening price and 8:30 is kind of aligned at the same level. Price trades above it and then down. So accumulation here, manipulation here, and then we distribute after running this low and tapping into this order block. Okay, this is a true ICTOB. You can see the down close candles, up move, fair value gap inside, right at 27 to 27 extension. Okay, that's where price is pricing from. So this is why we recalibrate, right? Accumulation right at 8:30 open, manipulation, distribution. Oil, gold. I believe that's everything. One thing to point out on DXY, I would love to see DXY tap into this area and then go higher. But I thought we'd get that today. Maybe they may use FOMC to do it. But of course, as I always say, we'll respond to price accordingly. Okay. Looking at a monthly chart here. Okay. So we'll see how price responds once we completely fill this area. Which we still have some room to go, right? So, I think if this run up would possibly be equivalent to seeing, this run down on the euro, right? Euro is still kind of within this range, right? But I do expect lower prices, and honestly, like what we're getting in the Asian session so far. Basically with this, you'll notice that days where Asia session is condensed, the price action during London and New York is beautiful, right? Because at least one of these sessions has to go into consolidation, and when you get a very condensed Asian range, right, it presents some pretty nice price action. And of course, there is no Asian range when it comes to indices, but you can see here. All right, that's all I have. If anybody has any misunderstandings, please reach out, and then we'll clear it up one-to-one.